What does the future hold for landlords? What are we expecting to see? Let's have a look. Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. So the future for landlords is looking very legislation heavy. We've got a few things coming. So let's have a look at what things we have coming and how that affects us from a tax point of view. What we can claim, what we can't claim. So we know what we can be spending our money on and how we can spend it wisely. So the first thing we've got coming is the increase in the energy efficiency levels. So that means rather than the standards that we're all sitting at with maybe our C, D, E classification of property, these are all increasing. So there's going to be minimum standards for how the property is energy efficiency wise. Now, any of these improvements may fall within either repairs or it may fall within capital expenses. So ideally, what we want to be looking for is trying to push these towards repairs. The reason we want to be pushing them towards repairs, if possible, is because those we can set off against our rental income. So that'll help reduce our tax bills when they are done. Obviously, if we do have to do these capital improvements, maybe we have to replace windows in their entirety to get the energy efficiency in the property, or we might have to do other updates and changes to the property. If it's simply changing the light bulbs, which funnily enough with some of them, that might be the answer. That might be what we need to do to help get the energy efficiency rating, then we'd be able to claim those against our rental income. So hopefully helping reduce our tax bill. So keep an eye on when that is coming in, and then you'll be able to make sure you are ready and sorted for these changes which are approaching over the next couple of years. A recently announced change is that you're going to have charging points on new builds and potentially if you're doing major renovation. So this is one to keep an eye out for. So this is likely, unfortunately, to be a capital expense, which means we're not going to be able to claim it against the rental income that you're incurring in a year and is going to be relevant when you sell the property. However, this is something we can look at as these changes start to kick in, whether there's any way we can fight the corner to put it as a repair, which then allows us to claim it against your rental income, because that's the end goal, hopefully. But for this one, it's going to be a bit of a question mark and probably more of a capital impact when we maybe need to be doing this. The next change that's happening is we're moving electric. So if we think about our gas central heatings, our gas cookers, all of these are starting to disappear, and it's very soon going to be that we need to just be putting electric heating systems. We need to be putting electric ovens. Now, I know in some properties, and like some of the ones that I've got, we've been putting electric cookers or electric hobs, electric cookers into the properties. So touch wood, we don't have any changes to happen with those ones, but we do have gas boilers. So this is something that as we upgrade, these changes are going to be impacting. Now, if it's legislation, I'd lean towards it being more a repair and we're having to upgrade and replace what we already have in place, which would fall into our repairs and we'd be able to claim that against our rental income. If, however, it is more you're doing refurbishment and it's a new project, there may be elements that are capital. So this is one that you may just need to take a bit of care on to make sure it can be allocated as a repair rather than a capital expense. Because ideally we want it to be a repair because then we can claim it against our rental income and obviously start reducing that tax bill now rather than waiting to sell the property in the year dot when it finally gets to the end of its useful life for you. Other solutions that are coming in with the energy efficiency, with the COP26 happening at the end of 2021, is that we're looking for energy efficiency and energy savings and using things like solar panels. So if you are looking at solar panels or have to have solar panels, these are probably going down the capital route. So you're not going to be able to claim these expenses against your rental income, but you probably will be able to claim them against your capital gain when you sell the property eventually. So again, these are expenses to watch because you may have to spend the money, but you're not going to get the immediate tax relief. So it's just taking care of watching kind of the cost benefit there to make sure you're not incurring too much expense that you're not going to be able to claim just yet. Another area that is being talked about is things like heat pumps. Now, heat pumps are potentially a replacement for your gas boiler system. So if that's the case, then these would potentially be a repair. So that would be great news if you're having to incur that sort of expense, because you'll be able to claim it against your rental income. The thing to watch is if you are doing it as part of a refurbishment, then it might fall into the capital element because you're doing the big refurb and it's falling within that pot. So it's something to be aware of and watch, but this one may be fine. You can incur the expense knowing that you're going to get the reduction in your tax bill at the end of the day for that tax year. As we all know, insulation is one of those in properties that is coming here, there and everywhere. Now, including insulation of the property, depending what it is, it may be improving the energy value. So from that point of view, hopefully you'd be able to claim it more as a repair and getting things up to the modern standard. And I'd be inclined to go with a repair approach to it. However, if it is, again, part of your refurbishment project, and you're putting different things in, there may be an element that is actually the capital and you can't claim it against your rental income. So it's just something to keep an eye on. It may be worthy of doing because it might actually save you bills and make sure that your profits on the property are improving, so the energy cost isn't too much. Another area is bringing in windows. So if you've got a property that already has windows, but they're a bit old and you want to bring in maybe double glazed windows to help with the energy rating and that side of things, hopefully they would fall within the repairs area. If you're not upgrading the windows, you're just replacing them again with a modern equivalent. So you might have 20, 30-year-old windows. As long as you're just replacing them to a modern equivalent, then you probably look to claim those as a repair. So that, again, great news because you'd be able to claim that against your rental income. If it's part of a refurb, then this would be more questionable. And it's that question of, is it a repair or is it capital? But definitely have a chat with your accountant on this one to see what is going to be the relevant method to treat it to make sure you're staying the right side of the tax man. Other things that are coming, we may be getting to a point where there are minimum internet requirements, which is not necessarily a problem if you are providing an internet service in your property, especially for things like HMOs or even single lets these days, then it's all claimable. It's an ongoing expense on the property. So whether you're paying for one level or another level, that expense is going to be allowable against your rental income. It's maybe just keeping an eye on what the rent is so that you're not finding you're losing the profits by having to pay out more expenses but not getting the income back on the other side of things. Obviously, with HMOs these days, it may be you have to have a requirement of a minimum internet in each room. So that might include extra complications with extra hardware or extra software or extra wiring. There's many different ways that I certainly don't know all the techie detail of it, but you may need to be looking at some of those different options. Now, most of those, if it's seen as a repair because you're having to put it in for minimum standards, I'd probably be leaning towards repair and putting it through, especially if it's just you need to get a router. It probably ends up in computer expenses in your accounts. If you're having to invest in the property and do it potentially as part of the refurb and cutting wires into walls and getting everything connected, this might lean towards more a capital expense. But again, this is an area which maybe warrant discussion with your accountant to make sure that as far as possible, you're claiming those expenses as early as possible in your accounts to make sure that you're not paying more tax than you need to. The final area to mention today is about smart meters. Now, this isn't really much on accounting or tax, but it's something that is coming in, especially in the energy sector, which from the sounds of things, energy prices are going up. So hopefully the smart meters allow you to see more what's happening in the property and manage those energy costs. And obviously from your point of view, hopefully it means you're not having to put in estimated readings or go and get check what the actual reading is at the property on a regular basis. So the smart meters may be a good way to just manage what is happening at the property, so you can hopefully manage that cost. As I know with HMOs, especially some of the ones that we've got, they're obviously big properties, they've got lots of people living in them, and energy is possibly going to be one of the bigger expenses that we are seeing going into the future, with increasing energy prices over potentially the next few years. Hopefully today you've discovered a few of the things that we're expecting to see, except making tax digital, which we've obviously not discussed today. These are the things that are happening within the property sector, and we're going to be seeing over the next few years. There's nothing too scary to be worrying about, but there's obviously changes and you need to make sure you keep up to date. Obviously, as things are happening, I'll try and keep you up to date on some of the things that are being impacted in your accounts and the tax side of things, and make sure you know what you can claim and when you can be claiming these expenses. If you have any thoughts, then please do leave a comment in the box below on what you're seeing and how you're expecting things to be changing in our property industry. Please like the video and do subscribe to the channel. Let's make tax less taxing.